Hey guys, Okana here. I'm going to talk about how to use Stochastic Oscillator and what you have missed, because I have been talking to a lot of beginners and I see that most of them only know about the standard overbought, oversold when it comes to stochastic, and there are some other things that are very important. It's only once you understand that you can have a greater success with this indicator. It's one of my favorites. I still use it together with price action. It helps me confirm support and resistance lines. I'm going to get into deeper into that. So let's start with the basics. Let's take a look at it on MetaTrader. You'll find this indicator on a lot of different applications, whether it's TradingView, you're using Netania charts, or whatever it is, you're going to find it. So on MetaTrader you find it under Indicators, Stochastic Oscillator, and I like to use 20 and 80 for the overbought, oversold. I'm going to talk about what that means. I like to use the 533 standard. It's pretty standard, and you can use higher. Some traders like to use 933. If you can look at it here, we have two. So 533, you see it's more noisy, so you have to be more careful. The 933 gives you less amount of signals, less noise, as you can see. But I like the 533. You can see it kind of resembles what's happening on the chart pretty good. You see you have a high here, and then you have a smaller high, which is also indicated here on the 533, but it's kind of missing on the 933. And you got another high which is also indicated. So basically, if you look at it, it's mimicking the price, so it's pretty good. I prefer it this way. I've been using it for many years. So it's up to you. You can check out which one that suits your trading strategy best. So let's start with the standard overbought, oversold. Most of you already know about that, which is basically, it's related to supply and demand. So it's trying to indicate whether price should reverse or not. For example, let's take a look at an area that we traded actually live last week. This was a few days ago. We traded that in the Skype group, actually, the CommuniTraders-Live. We were waiting for a target. So why did we trade it here? Because we had an oversold area, but of course the price action confirmed, which I always talk about the price action in every other video, that it's important that you learn how to read the market, not just use the indicator. So the indicator is just a confirmation, even in this case, and so we got a good oversold target. But this is how beginners use it, so why not jump in earlier? I mean, it was already oversold when this candle was dropping, so why don't we just enter randomly for calls and hope to win? Because again, we had a target, a strong support based on price action. We could estimate that there is a likelihood of a reversal here. So this is where the next step of stochastic comes in, which most people ignore. It's called convergence. So basically, if we look at this area now, at this target, if we look at the stochastic, this is the hourly time frame. Okay, in this case it happens to be the hourly. It's completely oversold, which is below the 20 level, which means there is a demand for buyers coming in. Okay, so as I said, supply and demand, so buyers were expected. So if we go to the 30-minute time frame, we see the same thing. So this is convergence between the two time frames. Okay, we got oversold. So we go to the 15-minute time frame and look at the impact on this support line we had. It's again in convergence with the two other time frames. It's oversold. Go to the 5-minute time frame. Again, we have good convergence at the moment of impact with the support line. We have convergence. So convergence is good because it means that the likelihood for the reversal here is higher because we have convergence. But again, your price action analysis is very important. If you don't know that, you will be randomly entering trades just because stochastic signaling oversold or overbought. So pay attention to price action. Another key point that most traders miss is divergence. So in this case, it's pretty much the opposite. Usually happens, for example, here is a good example of that. We will see in this area price moving up. As you can see, it's overbought. It's pretty overbought, so you would expect price to fall. But remember, we were starting on a strong support. Price was just reversing, and if you look on the other time frames, you will find that stochastic here at this moment on this candle before it closed was still moving up. It wasn't entirely overbought. So now we have divergence. Now one time frame is overbought, the other one is not. You see, it's the difference between convergence. In convergence, multiple time frames were saying the same thing, where they were very overbought or very oversold. But when it comes to divergence, it's the other way around. The time frames are different. Now if we go to the 30-minute time frame, you see it was moving up, so it was not overbought. It was moving up from oversold, but the 5-minute was completely overbought. So just because something is overbought or oversold, again, it doesn't mean that you should jump into a trade. So you should learn the price action, see what's happening, where is your target, where is price heading, is this a breakout? So the divergence is very good for breakouts, like in the case that I just showed you. And it happens over and over again. So we also covered the settings. As I said, that's the other thing that traders usually miss. They don't think about the settings they're using. So you need to experiment with that. For me, knowing the things that I know, the 533 works well. I wouldn't use lower settings because you saw that it gets noisy. I mean, let's try, for example, 366. You see, when you go higher, you get less noisy signals, less oscillation. So it oscillates fewer times. You see, it's further away. Now if we go back to, so it gives you fewer signals. You can check the different time frames. You see the time between getting oversold is very high. Okay, so now we go back to 533 and look at the same area. You got a lot of more bounces in between that area, and that could be good when you have multiple targets, multiple support resistance lines. It's good to confirm that with the stochastic, with the lower stochastic setting. So as I said, I prefer this. You might not prefer this setting, so experiment with that. But I wouldn't do a lower setting because it's gonna just get too noisy. So pay attention, convergence, divergence, and don't just trade every overbought and oversold area. If you're not familiar with price action, take a look at the price action playlist I have uploaded. There are lots of videos there on price action. You can see how I trade support resistance lines. Thanks for watching. I will put some links below to Stochastic Oscillator articles we have on binaryoptions.sock.com, so you can visit that for further read.